All right, so we spent a whole lot of today's show talking about what they call like the intersection, right? The stock market, retail investors, policymakers, and the Federal Reserve. You know, it's really critical because in a world where the only constant is that your dollar is going to be worth a whole lot less in the future and building wealth from wages and savings has just become a pipe dream, people have to put their money to work. I prefer the stock market, and I'll tell you why. One of the reasons why. A study of economic supercycles comparing the ratio of stock market to wages underscores why the current neoliberal era has exacerbated the need that you must own stocks, folks. You cannot do it with the wages alone. It's not cutting in it. And interesting, though, if you look at this chart, that so-called robber baron era, you know, that saw really a more modest ratio. It kind of belies the notion that the Gilded Age was somehow unfair. The ratio declined sharply during the labor power era. That's where businesses were forced to share more of their wealth. Listen, I thought it was a good era at that time. Again, we needed that back in the 1890s. Labor unions, though, since then, they've lost their luster. But make no mistake, there are efforts to hijack corporate cash by forcing more unionization. That's not going to work. It's a political thing these days, not economic. The answer is ownership. You have to have ownership. Own great companies. That's all I'm saying. To change your own personal economic trajectory, just be a part owner of some of these great companies out there, because that's what's going to happen. They're not going to level the playing field anytime soon. You're not going to have a greater voice at the table, but you always have access to the same stocks as everyone else, and that's your success. That's your key to success.